I'm an investor with 24 years experience and I've built six figures in three different asset classes over the last 6 years. But here's a bit of honesty. For a long time, I had a terrible relationship with money. It wasn't until 2019 when I finally committed to financial education that everything changed. And today, I want to walk you through the part of wealth building that no one wants to talk about: personal finance. Yes, it's boring and painful, budgeting, debt, expenses, but if you want to retire early or even just feel financially secure, this is what you need to get to grips with. Then you can invest. Chapter 1: The harsh truth. Income means nothing if you don't keep it. Let me tell you something that you may or may not be aware of. High income doesn't equal wealth. Trust me, I've met hundreds of contractors over the last 25 years who've earned serious money, then have nothing to show for it in the late 50s or even early 60s. If you spend everything you earn, you're not building wealth, you're funding a lifestyle. I learned this the hard way. Before 2019, I'd made and lost loads of money. I knew how to invest, but I didn't understand money management. I didn't track my spending, I didn't budget, I didn't build buffers. And so even with all that experience, I kept making mistake after mistake. And these mistakes were mainly related to personal finance. But after getting into personal development in 2018, then becoming financially literate in 2019, that's when I stopped trying to invest my way out of bad habits and started fixing my personal finances. Chapter 2, Step 1: Know your numbers. The first step is awareness. Sounds basic, but most people never do this. What's your real income? How much do you earn each year after tax? Like, what are you taking home every single month? What are you spending per month? What's left after expenses? What's your net worth? All important questions that you really need to start asking yourself. This is your starting point. It shows whether you're actually building wealth or slowly bleeding money without even realizing it. Track your income, track your spending, know the gap. That gap is your investment potential, and it's the most important number in your financial life. You might have heard the saying, spend less than you earn and invest the rest. If you find personal finance difficult, it's very likely you need to work on your money mindset. See below for a recent mindset video. Chapter 3, Step 2, Kill high interest debt. Here's the thing. If you've got credit card debt at 20%, there's no point investing in the stock market, hoping for 10% returns. You're losing more than you're gaining, you're earning. I made this mistake myself. Years ago, I took out loans to cover tax bills instead of paying from savings. I was earning 0.5% on premium bonds and paying 7% interest on the loan. Don't do what I did. Be ruthless. Pay down any debt that's costing you over 8% interest, if possible. This is guaranteed ROI. It's the fastest risk-free return you'll ever get. This is just a little snippet of the mistakes I was making between 2008 and 2018. If you want to learn how to avoid personal finance and investment mistakes from someone like me with real experience, see below to join my free investing community on School. You get a free investing course, and one of the modules is dedicated to financial mistakes and how to avoid them. Chapter 4, Step 3, Build a cash buffer. Now let's talk about emotions, because your mindset around money matters more than you think. If you don't have a cash buffer, if you live a month to month, you will never feel calm enough to make smart investment decisions. I've made emotional decisions with money, too many, and they always cost me too much. What changed? Well, one of the things that changed for me is that I built a cash buffer. 3 months of living expenses set aside, untouched, that alone brought peace, space, and clarity. Build a buffer before you invest. It'll make you a better investor, trust me. Most of the books I've read on personal finance and investing recommend a cash buffer of 3 to 6 months. I'm comfortable with 3 months, but you might be a bit more risk averse and want a 6 months cash buffer before investing. Before we carry on, this video doesn't contain any financial advice. The full disclaimer can be found below in the description. Chapter 5, Step 4, Reduce expenses and track your budget. Let me be brutally honest. If you're not budgeting, you're going to feel serious financial pain. Maybe not now, but it will catch up to you eventually, even if you're a high earner. Like I said earlier, I've seen it time and time again as a contractor. In fact, I'll give you a little example to drive the point home. I remember working in Oman back in 2020. A colleague, 60 years old at the time, told me that he could have easily saved £1,000 per month between 40 and 60, but never did. If he'd invested that £1,000 every month in the S&P 500, averaging just 10% annually, which is in line with historical averages, he would have had over 750,000. That's financial freedom for most people. Anyway, let's get back to reducing expenses. I used to avoid my bank statements. I didn't want to see the damage. It was painful, but ignoring it doesn't fix it. When I finally started tracking my expenses, I found hundreds of pounds going to forgotten subscriptions, overpriced services, and random spending. I cleaned it up and suddenly had money to invest. Some quick wins: cancel unused subscriptions, downgrade utilities, shop at budget supermarkets, cook more, eat out less, and I can almost guarantee you spending at least £200 a month on takeaways. This isn't about deprivation, it's about buying freedom. Chapter 6, Step 5, Increase income, but avoid lifestyle creep. Cutting costs is 100% a step in the right direction, but you can only cut so far. To build real wealth, you eventually need to earn more. But here's the trap: lifestyle creep. That's when every pay rise turns into new bills. Bigger house, fancier car, better phone, more subscriptions, etc. etc. Been there, done that. After 2012, I doubled my income, mainly because I went back to college in 2010 to get some extra engineering qualifications. And within months, I'd upgraded everything except my investment portfolio. Lesson learned. Another one: grow your income, but lock in a percentage for investing. 10%, 20%, even 30% if you can. The gap between what you earn and what you spend is your ticket to financial freedom. Financial education leads to financial literacy, and financial literacy leads to financial freedom. Chapter 7. Now you're ready to invest. Once you've killed debt, built a buffer, budgeted properly, you've increased your income, hopefully you get the point, that personal finance is hugely important. If you do well now, you're ready to invest. And when you do, you're not investing from fear. You're investing from strength. You're no longer hoping the markets will save you. You've already saved yourself. Investing now becomes the accelerant, not the rescue plan. So you can retire comfortably as a bare minimum, or early, which should, in my opinion, be the goal. Chapter 8, Why this leads to early retirement. Let me tell you why this is so powerful. When you get your personal finances sorted, everything compounds. You create a surplus. You invest that surplus. Your money starts working for you. You buy back time. That's how you retire early. It's not a lottery win. It's not a shortcut. It's simple, repeatable, and built on discipline. And trust me, once you experience the calm of financial control, you will never want to go back. Let me know in the comments, do you know what compound interest is? If not, I'll tell you. Basically, it's interest on top of interest. But before you switch off, you need to understand how powerful compound interest is, like how you can retire with £1.4 million by just investing £6,400 per year. See below and I'll tell you step by step with a recent video. Summary. So, to wrap this video up, personal finance is the foundation. Skip it in your investments are just a house of cards. Master it and early retirement becomes a real, tangible goal. Hopefully this little video has encouraged you to sort out your personal finances, if needed. Now, if you got some value from this video, I'm going to ask a little favour. Obviously, a like or a comment will go a long way. But what would really help is if you could send this video to someone you know who could benefit from this info. Maybe someone who's just started to invest. Anyway, thanks for watching.